Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. There has been a lot in the news on the impact of the U.S.'s creation of a potential sovereign wealth fund. This has been going on for a couple of months now, and I think it's important to mention that we are recording this on August 13th of 2025, exceptionally important because things are changing very quickly right now. But this could also be important to all kinds of people who work in the financial services sector. So equity analysts, portfolio managers, infrastructure folks, futures markets, and a whole bunch of people should really be wise to this. And that's why we're talking today on this topic with someone with a very rare perch and insight into it. Winston Ma, CFA, is Executive Director of the Global Public Investment Forum and an adjunct professor at the NYU School of Law. Now, previously, he was also Managing Director and Head of North America Office for the China Investment Corporation, also known as CIC. And before that, he worked at Barclays, JP Morgan, and Davis Polk. So, Winston, thank you for coming back to the podcast to talk to us about a slightly different thing now.
Yes. Thank you, Bob.
So one of the things that I think would be exceptionally interesting for you to share, because you have so much experience with sovereign wealth funds, is how this potential fund would differ in its structure and other ways from those that exist now that people might be familiar with.
Right. To start, let's think about the term sovereign wealth fund, right? So the term here, sovereign, means it is a vehicle managed by the government. Wealth actually means the resources of that country, right? And the fund means that they will use the resources to invest. So in the traditional context, sovereign wealth funds are created by countries that have natural resources or import-export surpluses as resources, right? The former includes the Middle East, obviously, as well as the largest sovereign wealth fund, Norway, because they all got money from oil, right? Middle East oil or the North Sea oil, right? And the other aspect, the best example is CIC, right? Because China is a huge import-export country, enjoys a huge surplus from import-export businesses, especially from the U.S., right? So China has used the import-export surplus as the national resource to set up a sovereign wealth fund, including CIC, to make global investing, right? That's the traditional context of a sovereign wealth fund.
So now let's shift to this proposed structure, which would be a bit different.
That's right. So the U.S. sovereign wealth fund has three main differences from the traditional concept of sovereign fund. So first, we talked about the surplus countries, right? Here, the U.S. is a deficit country, means it exports less than what it imports. So it does not have that surplus, plus relating to the U.S. national balance sheet, right? The U.S. has huge debt. So overall, it's a deficit country. That's the first. Second, for most of the countries, they set up a sovereign wealth fund by a national legislature, right? So, for example, a Congress will set up the framework of the sovereign wealth fund, defines the mandates, and set up the governance structures, especially who this fund is going to be reporting to, things like that, right? So here in the U.S., we do not have this. This is driven by an executive order of Trump. And finally, for a typical sovereign wealth fund, because it is investing the national resources for future generations. So the main focus is to manage it as a portfolio of investments and increase the returns of the portfolio to build up a treasure trove, right, for the future generations to have, right? But here, the U.S. sovereign fund clearly has a strategic angle. So it's not a wealth creation fund. Instead, it is a strategic initiative fund.
I guess, this would mean there would be much different operations, but, there are certainly policies that sometimes the other strategic wealth funds address, right? Mm-hmm. Foreign policies, sometimes there are. So it's not.
Some funds have multiple objectives in one fund.
Right. So now the impact could be massive on many different parts of the investing world. Right now, it's been, some of the impact has been on potential impact has been on PPP,
yes,
and other types of infrastructure projects.
Yes.
So could you talk a little bit about how you read that from the what we've had announced so far within the U.S. Sovereign Wealth Fund?
Right. To put this into context, during Trump's first term, Trump already had the idea of a national infrastructure fund, right? In order to facilitate the long-term projects of infrastructure activities in the U.S. And at that time, it also has the idea of using this fund to leverage more global capital, including foreign sovereign funds, right, for this. Right now, at Trump's second term, actually, this strategy is taking shape because of this U.S. sovereign wealth fund concept. Because if we start with what Trump announced at the very beginning, right, this sovereign fund will be aimed for strategic sectors. For example, tech sectors relating to the AI rivalry with China, or infrastructure sector, right, to invest in infrastructure projects in the U.S. to increase the productivity of the national economy. So these are all very strategic from investment objectives perspective. But if we look at this in the global context, it's not that different from many other sovereign funds that have multiple objectives. For example, Middle East funds, right, like Saudi's PIF or Mubadala of UAE, or even you can including Southeast Asia sovereign funds like Malaysia, Indonesia, and Singapore, right? They manage the portfolio for investment returns, for sure. But at the same time, they also look into strategic angles to make investments that can promote their domestic economy, especially in the current digital revolution time. They try to find ways to invest in the most advanced technologies to improve their innovation ecosystem in their own country and help their national economy to succeed in the digital transformation. Right? We have seen this a lot in the PIF, Temasek, and Mubadala type of sovereign funds.
Right, and Singapore's fund has also been pretty successful and has a long history of doing that. Right, so yeah, there are models out there for this, but the one has to also look at one of the other modalities in this is that, as they say in the U.S., we have 50 sovereign states. So if you think about just what the impact on project financing could be, which at the moment largely falls on state budgets, that could give downstream the states a decent amount of flexibility in making other fiscal priorities. But let's talk about the tech sector, because it's been one of the things that's been exceptionally interesting. So let's talk about TikTok.
Yes. Yeah. TikTok was the first deal that Trump mentioned when he announced the creation of the U.S. Sovereign Wealth Fund, because according to the TikTok law, TikTok either has to sell its controlling stake to the U.S. or it has to be shut down, right? So who should be this U.S. ownership holder, right? So naturally, the U.S. sovereign fund is coming up, and potentially it can work with other co-investors, existing U.S. investors too. But since this is very much a regulatory-driven deal, it's very natural that the U.S. sovereign fund would be a important shareholder of this U.S. consortium, if you will, to take the controlling stake of the of TikTok, right? And if we use a recent deal as a reference, the Nippon Steel, U.S. Steel deal, right? In this case, U.S. government finds the need to be part of the deal in order to control the company's strategic decisions going forward. What it arranged was for the U.S. government to receive a golden share. So for this golden share, it represents a small percentage of interest of the company, but it has a veto power from the voting perspective to control the company's future corporate decisions.
Right. That was an exceptionally interesting structure also, because it did have this very senior, if you want to put it in investment terms.
Yes.
It was very junior, but also very senior in a way.
Yes. Yeah. So, relating to the PPP conversation we just had, right? So for that, Rob, you're the expert in that sector. One big challenge in that sector is just the variety of state offerings. right? Or even some in some cases city offerings for semi-government bond offerings for strategic infrastructure projects, for example, right? And for all these bond offerings, they all have different bond ratings because they are backed by different layers of the governments, right? But if we have the U.S. Sovereign Wealth Fund as the leading investor for the government-backed financing consortium, then for all the deals, they will get the sovereign federal rating of the U.S.
Right. And there would be one sort of infrastructure for the legal process, which makes it a lot easier for asset owners to make investments in it because right now they have a lot of work to do to understand the differences in PPP legal laws across different states and localities. But with one, that would make it much easier. So, no, but that also has exceptionally interesting knock-on effects because the infrastructure and the tech thing is sort of connected in one way is that a lot of the tech advancements require a lot of electricity, which
for example, AI.
Right. So they're connected. So can you talk a little bit about what might be an impact from that?
Very much so. If we think about the AI development right now, the bottleneck is the data centers and power supply, right? So for AI, we have all the models. You can have all the data to train the models, but you need to do all these on digital infrastructure, right? Advanced cloud computing based on data centers. But for those computing, it will require a huge amount of power supply, much more than we expected than before. So therefore, in the recent White House AI action plan, Trump specifically signed an executive order to accelerate the approval of data center projects, so on and so forth, right? These digital infrastructure projects, as well as energy supply infrastructure projects. So you can imagine that if to the extent the U.S. Sovereign Wealth Fund umbrella has access to capital available for investing, the Trump administration most likely will use the U.S. Sovereign Wealth Fund as an umbrella to go into new projects for data centers and energy supplies.
Right. I also, one of the other things about creating more energy resources in the United States is there are a series of approvals that have to go along. There are environmental surveys. There is the local regulator. There are a lot of people that need to kind of get going together on an energy project.
Yeah. So that's why the White House AI work plan issued like a week ago or 2 weeks ago, right? Yeah. Specifically requires acceleration of these approvals.
Right. And so it's going to be interesting to see how that evolves.
That's right. Yeah. So actually, this brings a very interesting angle. Like the U.S. Sovereign Wealth Fund, because it's backed by the U.S. government, when it goes into a project, it does not only bring capital, right? But it also brings this connection with the government, and in some cases, it will facilitate the solutions for the red tapes.
Right. Because there is an awful lot that slows these things. The time frame to completion of a natural gas facility is quite a bit longer in the U.S. than it is in most other places, most of the developed world.
Very much so. And if you add in the foreign investors, this point may be even more relevant, right? Because for strategically important sectors, foreign investors will face a lot of regulatory approval requirements, probably even more so than a typical U.S. project itself, right? Because it involves the foreign capital, national security review, so on and so forth, right? So if the U.S. sovereign fund is part of the financing package, then essentially it lowers the political sensitivity, and it will open up the windows for foreign investors to participate in these projects much easier.
Right. So that depends on how it's structured, but it essentially lowers the duration risk.
That's right.
Essentially, because bondholders need to get paid over a set period of time.
Of course.
Yeah, it's exceptionally interesting. Well, are there other impacts that you can anticipate that would come to people who work, like a lot of the people who will listen to this podcast are in analytical roles at investment management companies. So how do you think it would change their lives?
I think the impact will be huge, especially after the recent trade deals with Japan, Korea, EU, right, which involves hundreds of billions of investment commitment for each of them into the U.S. The U.S. Sovereign Wealth Fund, even though it started as a collection of ad hoc assets and the investments, it now has good opportunity to be more institutionalized. Even though the different parts may still be decentralized, but when you're talking about hundreds of billions here and there, that's a great opportunity to institutionalize the U.S. Sovereign Wealth Fund into a much more institutional investor-like setup, right? So which means you will, for example, if you look at the U.S.-Japan joint fund concept, right? When the two governments are involved, there will be more governance set up. So even though you do not have a umbrella level governance at this moment, but for the U.S.-Japan fund alone, or the U.S.-Korean fund alone, there will be sufficient governance to be developed, and it will also have more institutional setup to have multiple functions to have check and balance within the institutional setup to provide more transparency, for example, for the global markets. But the most important impact, again, is to look at the U.S. sovereign fund as a big co-investment platform, right? So for all the institutional investors, whether it's domestic or foreign, when they invest into U.S. assets, the U.S. sovereign wealth fund may be the perfect co-investor because it brings capital. It also brings the government connections, and it also brings the federal rating if you need to borrow, right? Yeah. So when you look at this, when this U.S. sovereign fund is or will be more institutionalized, it will attract a lot of interests from global investors, both in the U.S. and in foreign countries, as a potential co-investor for them to go into the U.S. capital markets.
Right, yeah.
Especially in sensitive sectors or advanced tech sectors.
Right, the rare earths are a good example of that, right?
That's right. Yeah, it's fascinating to see the Pentagon is active in making these investments, right? Right. So last month, DoD made $400 million investments, equity-linked investments into MP Materials. That's the major U.S. rare earth that's actively producing, right? So it's a good example of the multiple touching points of the sovereign fund. First it's equity-linked investments. Right. So potentially it may become the biggest shareholder of the company, likely, right? And secondly, it's also a purchaser of the products of the company, right? It already entered into long-term 10-year supply contract. Yeah, right. Yep, offtake contracts for more than for 10 years to purchase 100% of the new production from the new projects financed by this, right? And then the third is because this equity-like investment, so it become more like a buffer for more lenders to come into this industry, right? So Goldman Sachs and the J.P. Morgan collectively put in $1 billion debt financing after this equity-linked investments by the DoD.
Yeah, I mean, it's exceptionally interesting. Now, obviously, there's a long way to go. So once again, I'll just say we are recording this on August 13th. In 2025, things are going to change. But thank you for being here, Winston, and sharing your view with us now, because once again, you have a very rare perch. So thank you very much for sharing it with us.
Thank you, Rob.
And if you want to hear a little bit more about Winston's experience and his view of the structure of sovereign wealth funds, which is going to be really important in your due diligence process over this, he did publish a book called The Hunt for Unicorns: How Sovereign Funds Are Reshaping Investment in the Digital Economy. It's published by Wiley. You can buy it wherever you buy books now. There is a funny little CFA connection here. The foreword was written by CFA Institute's President Mark Franklin. So CFA charter holders, if you're looking connection there,
Yeah,
there's
and you
one.
can see the connection between the CFA Institute and this important topic of sovereign wealth funds.
Right. So please do check it out. So until next time, I'm Rob Rowan, and this has been Compound Insights.